Like Herman, always cheerful with his crisis, but give us some great solutions. Ladies and gentlemen, a couple of years ago I was attending this conference in Amsterdam. Large conference, like 300-400 people. Conference on improved nutrition. How do we get there? And there were people from large companies offering solutions, and there were people from developing countries telling about their struggles. And at one moment in time there was a lady standing up from the audience, from the public. And she's saying how grateful she was that she could get a loan a couple of years ago, because with this loan she had been able to build a chain of stores, of small stores where she could offer improved nutrition, improved food to everybody. So in this mixed audience, a lot of Westerners, the presenter asked the woman, well, tell me about your loan, how big was it? She said like 400 euros. So everybody's a little bit like smiling, like, okay, 400 euros, great. And then she said, but by the way, how much are you making now? She said 40 million euros per year. And that was not a great example of the impact you can have with limited money. My presentation will be, I have to use a PowerPoint because it will, at high speed, I will go through a couple of things, drilling down from the world of investment, sustainable, responsible investment, sustainable investment, impact investment. And I leave it there by describing some of the tendencies, some of the definitions, and some of the numbers, and then I leave it there for the next speaker, who will go much more in detail. And by the way, in this audience, there are a couple of great experts on impact investing. So, first of all, let me start with the VBDO. Very briefly, we are an association that they call in other countries a SIF, a Sustainable Investment Forum, a forum made of basically 4 different groups of organizations. The first group is not an organization at all, those are individuals that just believe in the cause. And then there's 3 groups of organizations. First of all, the financial sector, banks, insurance companies, pension funds, and the like. Then we have the group that provide data, like MSCI or Sustainalytics, or the big 4 accountancy firms. They are a member of our forum, our organization. And then we have the NGOs, like Oxfam, Cordate, World Wildlife Fund, Friends of the Earth, and some labor unions. A very bizarre, diverse coalition, but they share the same mission, and that is addressing sustainability through the capital markets. So you need the money to do something else, which is usually done by companies or any other organizations, entrepreneurs. And we do this by being active on what we call there the supply and the demand side. Supply side being supply of money. So we follow closely the various subsectors in the financial market by doing benchmark studies. And in a benchmark study, you measure how responsible, for instance, pension funds are investing. And we measure it and we publish it. We're very transparent. So for the 50 largest pension funds, you can look and see how well they're doing. And then we did the same thing for insurance companies and private equity and the philanthropical sector themselves, because they do not behave as sustainable as we would sometimes wish they would be. And then there's the demand side. It can be all kind of things, but suppose it's equity. We follow 75 of the largest companies each year, visit their AGMs, ask questions about sustainability, and from an investor side help them to do the real things, because they work in the real world, in the real economy. Financial people not often work in the real economy. That depends on the extent to where they really help real companies, or real things to develop sustainably. So this year we had a number of themes like human rights or tax or remuneration, and we do research to those issues. So what about socially and responsible investment? Now, first of all, you see that there is brackets, because we started the concept with socially investment and then it turned to be responsible. Responsible basically means it's mainstreaming the whole thing. So there's large banks in Holland, they would say, well, we can assure you that we do not invest your money in cluster ammunition, for instance. Full line, full dot, yeah, that's the end. They would say this is responsible because we have one exclusion in mind. That is of course rather limited. If you go further down the chain towards real sustainable investments, then you would see positive investments in things that would change the world. For instance, invest in glass or clean tech or any companies that take into account human rights. The basic definition of responsible and sustainable investment is that these are investments that take into account ESG factors, environmental, social, and governance factors. I will offer you though two other definitions. One is about long-term thinking. In the word sustainably, because forget socially, you can read sustainably also there. In the word sustainably is a time element. And the time element is long-term. Sustainable investors do not think of the profit of the next day. They're no day traders. And they are far from being high-frequency traders. Now, they think about long-term, about adding profit on the long term. The other perspective on sustainable investment is real economy. And now it gets very close to impact investment. It's investing in the real economy. So whatever they say about derivatives and all kinds of papers, the moment you have a paper that puts a value on something, that paper can be traded. And then you get at the end a world that consists a lot of virtual value. And I'm not sure most of you will probably be aware of the fact that if you put all the money in the world together, and you compare that to the things that really count, that you can measure, the services, the products that are all together, all the buildings in the world, all the gold in the world, if you put that together, then you will see that the first is 20 times as big as the second. In other words, all the money of the world, which used to be covered by some bank, some gold in the central bank, is only covered for 5% by real things. Even services I count as real things. So if you see that investing in the real economy, that could bring real changes and real improvements. So I'm putting down investments in total. Responsible investments, we have having one or two exclusions. Sustainable investments, going best in class. And then at the end of the line, you get to the impact investment. Now why would you do all of this? Well, perhaps because you have better returns. A lot of research has been done, and mostly, if you look from a long-term perspective, the returns are equal or better than for traditional investing. But also you can look from this perspective and say, well, the risks could be reduced, which makes sense because long-term thinking companies, they provide solutions for the future. So in Holland we have famous examples like with Philips or Akzo Nobel. They create a group of products that they call premium, eco-premium products. Those products help their customers to become more sustainable. For instance, to reduce fuel on large ships that are painted with Akzo paints. The moment for those products that of course have a high level of R&D, high level of innovation, they charge a higher margin, normal. And because of this higher margin, they get more income. So here financial and sustainable performance go hand in hand. And that way you provide a better world. This is a famous graph by Harvard in the end of 2011, the research, where it shows that when you would have invested $1 back in 1992 in a sustainable company, you would have gained in 2010 $22 as opposed to a mere $15 in a non-sustainable company. We'll skip a couple of slides because I'm sure they will keep me to my 15 minutes. Let's go to the impact investment. I will share with you two definitions. One is the definition of the GIN. The GIN is the Global Impact Investing Network. The definition they have is an impact investment is an investment made into companies, organizations and funds with the intention to generate measurable social and environmental impact alongside a financial return. Now mind you, it should be measurable, the impact should be measurable, and that should also be a financial return. Now, if you look to the markets, there could be all kinds of markets. Could be emerging markets or developed markets. And it's not clear about what kind of financial performance or return there will be. Could be a below average, where you sacrifice some of the returns to get a better social performance or not. It can be, that's clear though, to all kinds of different asset classes, geographies and sectors. Now, there's another definition about GSIA. You might not know this thing because it just exists since half a year. The GSIA is the Global Sustainable Investment Alliance. In fact, it's a gathering of the largest SIFs, you remember a SIF is like a VBDO, in the world. And they made a trend report a couple of months ago where they discussed impact investing. And their definition is this: impact investing is considered to be a strategy with sustainable investing referring to targeted investments aimed at providing solutions to social and environmental problems. Now here you see also the impact of the US to a large extent. Two things are missing: the measurable part is missing, and the financial return is missing. Here the lead seems to be taken by the offering solutions, by finding solutions, by solving a social problem. And that is because in the US, a thing like community investment is a very popular thing. It makes sense because there's a lack of things that we do have been arranged by the governments in Europe. They are done there by means of impact investing, by community investing. Also here you see it spreads various regions and margins, can be businesses, and as I said, the community investing could be related to all kinds of different things, underserved individuals, communities, helping to develop community facilities, affordable housing, etc., etc. So, the Eurosif study, that's this one I have over here. That's a 2-year study about the SRI market, how big is it? And for the first time we discussed impact investing. Basically we used the GIN definition, but then we said that the investments are often very often project specific and they should be distinct from philanthropy. Keep again this funneling thing: investment, responsible, sustainable, impact, and if you continue and financial profit or returns are less and less important, then you end up with philanthropy, of course. Here they said it's really total different, and we see that is a positive financial return should be done. I'll show you some figures later on. This is the global market. We have 89 billion community or impact investments. The biggest chunk is in the United States because of this heavy weight to the community investment. Then there's Europe, Japan and Australia. Europe we have like 14%. This is like 9 billion, 8.75 billion euro. And basically it's 3 large chunks. Microfinance is the biggest part in Europe, 55%. Then a community investment, and then there's the social businesses and the entrepreneur fund. Well, this is a thing that is very much liked by people, by young entrepreneurs. They like to invest in other entrepreneurs, and they believe in that they will be successful and they bring some value to society. And you can make money on top of that. Some of these social businesses that get a specific status now in the European Union, some of them, they really help people. Like there is an example, let me see where I have it written down, Auticom, which is an organization in Germany. They help autistic people to get jobs, specifically in IT, because they have very good skills in that element. They are very precise in doing repetitive work. So these are kind of businesses we call social business. Now social business gets a specific status and also a specific investment. Social investment has a specific status according to the plans of the European Union. Some dilemmas, of course. I'm going to the last couple of slides of my presentation. First of all, the question is, are we below market rate or market rate? That is not clear at all if you talk about definitions in impact investment. So people would call impact investment just a thematic investment, so in clean tech or clean energy, where you would expect normal or above average market financial returns. But there's also the high impact investments that are more focused on, let's say, limited financial returns, of course, with the idea of creating a higher social return. Then the question is the measure part. You remember that was in one definition, but not in the other one. How do you measure the impact? Actually, a thing which is gets a lot of attention, not only in impact investing, but in general, it gets a lot of attention. And then finally, in the European survey, one of the most interesting things I saw was about motivations and barriers. Why do people invest in impact investing? And funny enough, directly behind the first two, that make a lot of sense, of course. If you want to have an impact, you care for sustainable development and for community development. But the third element was a stable long-term return. And that's funny because now we're back to square one, where we said, hey, one of the definitions of sustainable investment is this long-term thinking. And here it says, yes, we want a long-term return. That's why we do in impact investing. And also because the risks associated with it are seen and perceived as reduced. Now, what are the barriers? Lack of viable products, lack of expertise. We do not have enough of it. So concluding, it's a market where a lot of things are happening. It's rapidly developing. Definitions are not always clear, but as we go, they are improved, they get more clear. It's global, it's there in every continent, but we see differences across regions. Legislation, like I spoke about, of the European Union, that will help to structure this new asset class. It's seen as bringing stable returns, and there's a clear need for more products. Ladies and gentlemen, I was attending a meeting with a large company the other day, and I heard one investor say, oh, listen, basically, at the end of the day, all companies are owned by all investors. So hence we have a responsibility to help those companies become better companies, be more sustainable. And if I move on, I would say all the money in the world, finally, is from all the people. Because your pension funds are very wealthy, but the beneficiaries, they own the money actually. And isn't it funny that everything that's happening, or a lot is happening, on the field of sustainable investing, is not done because of us that hold the money, but it's in spite of us. Now when we see that financial investors are looking for more products, it should be us who ask the question. So I would say, help them out, speak up, and join the market. Thank you.